Good afternoon, everyone, and welcome back. This is Daily Data Analysis with a quick market update for today, Wednesday, 16th of August. Regarding economic data, NBA 30-year mortgage came again back above 7%. We were talking a couple of weeks ago that we were lowering below 7%, but the last two readings were above 7%. And this is because the outlook for interest rates are still pointing higher. So the mortgage rates are upticking again. The refinance index is continuing lower and applications still in the negative, showing the low demand for mortgages at these high interest rates. Building permits preliminary, as expected, barely, and housing starts month over month came 3.9%. Housing starts are starting to picking up again due to the lower demand on the second-hand buildings. So new houses are picking up on demand, and that's why housing starts month over month is 3.9%, despite the last reading showing minus 11%. Regarding the industrial production year over year still in the negative, month over month picking up 1%, manufacturing production 0.5%, and year over year in the negative. So mixed sentiment between production and manufacturing, industrial manufacturing, showing that the economy is cooling, but at the same time, manufacturing and consumer are still showing signs of strength. So this is regarding economic data, nothing big of a deal. We are still waiting for FOMC minutes in 1 hour. But let me first talk about Target. Before open today, we got Target earnings, and it slashed full year earnings forecast as retailers struggles to win over 50 shoppers. So basically, it was earnings per share higher than expected, but revenue lower. And if we look at the charts, it started going up quite a bit in pre-market, showing this big push 11%, but since the open, we are just down 3.80%, and right now we are at 3.60 on the green on Target, but this is not looking good for Target. Remember, Target is consumer discretionary, and that coupled with the fact that Tesla is minus 2%, also consumer discretionary, Amazon minus 1.42, starting to enter in this huge gap of earnings. So XLY today is minus 0.60, barely at support, and it really shows you how the consumer discretionary, and there are some signs of slowdown on this consumer spending, and this is reflected in earnings. So all these stocks and the sector fund are pushing lower. That's why basically most of the parts of the market, banks, Google also minus 1.40% on the day. Look at this huge flash. Microsoft is barely in the red, but still Meta minus 1.90. Nvidia was trying to continue higher. Yesterday it was quite a volatile day, and now we are continuing lower. Let me tell you, the selling pressure is increasing and increasing. The only one that is barely in the green 0.20, it's Apple, just sitting about this gap at 176. But the overall Nasdaq is just continuing lower. And look at this, we are starting to assimilate, to accept this pricing below this pivot of last week low. And if we check the 1 minute chart, well, let's go first start with the 2-hour chart, because a series of lower lows and lower highs are basically confirming a downtrend that is now moving into a territory of a little bit of worrying. If we check this, I think we have potential to go to this level of 14,800 at this pivot that we got on June. But let me tell you, these days there are a lot of selling pressure. There were a couple of moments in which bulls got the opportunity to just push again, but the huge, big amount of selling, coupled with the fact that there's no buyers up here, it's looking quite bad. The 30-minute chart at this support on Monday, yesterday we tried to hover that, but we have a late spike to the downside. Look at this 30-minute candle at 3 p.m. And today, more of the same. We couldn't hold closing price of yesterday, and once we flashed the pre-market low and this support of the opening print on Monday, we just continue lower and lower. And if we change to the hour again, even the 4 hour, this is the pivot I'm mentioning. We are starting to enter in this space of volatility and which we don't have structure up here until 14,800. Right now the Nasdaq is 0.70. The S&Ps, it's also entering a place in which we don't have structure until 44.14, and that's 20 points below the current price. So be really careful right now because we are seeing signs of weakness everywhere. All the tech stocks but Apple are in the red. There are no supports that are holding price action. We are still rejecting the 45 EMA, and the price action is certainly bearish. More indication of bearish price action is dollar was during the pre-market hours pulling back a bit, but then it's starting to show signs of strength, continuing pushing towards this pivot that we got on early July. And look at these buyer bottoming tail, another bottoming tail here. So dollar is putting a lot of pressure on stocks, and also the 2-year. The 2-year is having a lot of bottoming weeks, and the 10-year it's still pushing 4.30. The 2-year is approaching 5%, this line, and yields are continue pushing strong. That's one of the things that it's putting a lot of pressure on the stock market. Higher interest rates, it's really bad for the stock markets, and more than that for the Nasdaq, for the tech stocks. Dollar yields higher, banks in the red, more regulation for the banks. The pitch trying to showing in the media news that they will be most probably downgrade some of the banks, JP Morgan, Bank of America. This is looking really bad. There's nowhere in which we are seeing, this is a small caps, look at this, strong selling, no weak down here, strong selling right now. More indications, gold, strong selling, copper, strong selling after yesterday's minus 1.73. Bitcoin is just in the middle of nowhere, so we can just skip this guy. But the thing is that there's weakness everywhere, and you have to really manage your expectations and think about what kind of price action am I seeing this week. Let's go to the 15-minute. We push on Monday. On Tuesday, during pre-market, we got a nice flash. We continue lower yesterday, Tuesday, and today, Wednesday, is just a bloodbath. Candle after candle after candle pushing lower. No amount of signs of support. There's a lot of buyers that are not present in this market. So be careful with this, because it looks like we were starting low, slowly going lower, but now the trend is accelerating, and now that we are entering this void pocket of no structure until this 14,800 was the previous structure that we have. We push, we pull back, We established this higher low and then we continue higher. Now we are back there. So until here, I don't think we are going to see buyers, strong buyers, willing to commit to buy the Nasdaq. And even then, I will be waiting for signs of big blocks of strong seller or strong buyers, or reducing the amount of selling pressure that we are having right now. So until then, I think we have to really be patient. There's a lot of fear in the market regarding higher interest rates. Maybe the Fed will hike again. Maybe we don't avoid the soft landing. We don't avoid the recession, and we cannot do the infamous soft landing. There's a lot of uncertainty and fear on the market. So be real careful right now. And that's all. Until 1 hour from now, FOMC minutes, I think nothing will change seeing the minutes. Everyone knows that the Fed's still hawkish and we are still seeing strong signs of consumer spending. So I think market will adjust expectations and maybe higher interest rates will be the final outcome. Thank you for your time. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recap, reviewing fundamentals, performing technical analysis, and going through all the markets that may interest you and you need to really understand to find your edge in the market. Thank you for your time. Remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.